VOO and SCHX are both exchange-traded funds, ETFs, that provide exposure to large-cap U.S. stocks, but they track different indices. Let's break down their features and differences to help you decide which one is the better choice for your investment strategy. First, let's look at VOO, the Vanguard S&P 500 ETF. VOO tracks the performance of the S&P 500 index, which includes the 500 largest publicly traded companies in the U.S. These companies are considered a benchmark for the U.S. stock market. VOO has an expense ratio of 0.03%, which is very low compared to many other ETFs. This makes it a popular choice for investors who want broad exposure to large-cap U.S. stocks with a low cost. Next, we have SCHX, the Schwab U.S. Large Cap ETF. SCHX tracks the Dow Jones U.S. Large Cap Total Stock Market Index. This index includes large-cap U.S. stocks, but it's broader than the S&P 500 and includes more companies. Like VOO, SCHX has a very low expense ratio of 0.03%, making it an affordable option for cost-conscious investors. In terms of performance, both VOO and SCHX track large-cap stocks, so their performance is generally similar. However, because SCHX includes a broader set of large-cap stocks beyond the S&P 500, it could slightly outperform or underperform VOO depending on the market conditions and the performance of the additional stocks it includes. The difference in performance between the two has been minimal over time, so this factor may not significantly influence your decision. When comparing the underlying indices, VOO tracks the S&P 500, a well-known benchmark of the U.S. stock market. It's widely considered to represent the performance of the largest and most established U.S. companies. If you want exposure to just the top 500 U.S. companies, VOO is the right choice. SCHX, on the other hand, tracks a slightly broader index, which means it includes more large-cap companies that might not be in the S&P 500. If you prefer to have a slightly more diverse selection of large-cap stocks, SCHX may be appealing. Both ETFs have a low expense ratio of 0.03%, which means they are both cost-effective choices for long-term investors. VOO has a slightly larger asset base than SCHX, with over $300 billion in assets under management. This makes VOO a more popular and liquid ETF, which may be important for investors who want to trade frequently. SCHX, while smaller, still offers substantial liquidity, so it is also a viable option for most investors. In conclusion, both VOO and SCHX are great ETFs for those seeking exposure to large-cap U.S. stocks. VOO is ideal for investors who want exposure to the S&P 500, a key benchmark for the U.S. stock market. SCHX, on the other hand, offers exposure to a broader set of large-cap stocks. Both ETFs have low fees and similar performance, so the choice comes down to whether you prefer the focus of the S&P 500 VOO or a slightly more diverse set of large-cap companies, SCHX. Ultimately, both are solid investment choices, and your decision will depend on your investment goals and preferences.